The market is kind of shrugging this all off. What size of a release are you expecting when it comes to these SPRs? We hear the latest round is 15 million, but what options does the U.S. have moving forward?
Good morning, Yvonne. So the options are extremely limited. And the SPR release that the Biden administration announced yesterday, 15 million barrels in December, let us remember, is actually a part of the 180 million barrels total that they had announced in March, which was actually supposed to be completed by September. But, you know, they were just unable to find takers for that amount of oil. Look, the SPR release, to my mind, has become a bit of the, the only tool you have is a hammer. You tend to see every problem as a nail. Right now, what the U.S. needs is, especially going into the winter demand season, high demand season on both sides of the Atlantic, Northern Hemisphere, is fuel stocks, especially distillate stocks, diesel and heating oil. And they're running very, very low on those. The U.S. refining system is cranking out, running at almost 90% operating rates, which is quite high for this time of the year, because let us remember, it's supposed to be turnaround season through September and October. And they just still are draining down their refined product stocks, which is what the market needs, not crude.
Vandana, the thing is, having a release from the Strategic Petroleum Reserve is only a short-term fix, is it not? I mean, why do it?
It is indeed a very short-term fix, and it is putting up a lot of bigger problems down the road, as a lot of U.S. lawmakers have already been pointing out and criticizing the Biden administration for draining down the reserve so rapidly, because they've been asking, when are you going to replenish? What are the kind of prices you're going to prepared to pay to replenish it? The current reserve was stocked at an average price of less than $30 a barrel. So, of course, it's going to be replenished at much higher cost. But to your other question, there really aren't any other tools left. We're hearing about the NOPEC bill, which is not going to fix anything in the short term, and so I don't think in the medium to long term either. You're hearing of some proposals to reduce or completely curtail refined product exports from the U.S. I don't think that's practical either. The U.S. refiners are going to be extremely upset. And the U.S. then risks leaving Europe in the lurch, which is depending on U.S. refined products as it moves away from the Russian barrels. So no options. This is probably, SPR is probably the least of the worst options.
How would you describe this relationship between the U.S. and the Saudis right now? Is it basically beyond repair? Is there any signs of an off-ramp in your eyes?
It's the nadir, as far as, one can look back to the past 3, 4, 5 years. It was the OPEC decision to cut production, after repeated entreaties by the U.S. over the past several months, actually more than a year now, to actually increase output was seen as a snub, not surprisingly. And it's the nadir of the relations. Do they ever change in future? It's very hard to say. Right now, the biggest priority for Saudi Arabia, as I see it, politically, is to keep Russia in the fold. And, for the foreseeable future, I think, because I think Saudi Arabia has been, this is pre-COVID, pre-Ukraine, Saudi Arabia has been very clear that the future of OPEC is as OPEC plus, and they definitely need Russia in the fold. So, was Russia behind the decision to cut output? We know Russia needs prices to be higher as it looks at supply volumes declining. Most likely it was. And I think Saudi Arabia has sent a very clear signal whose side it is going to take, because its interest lies in preserving OPEC plus.
Yeah. And how do you assess this Russian cap on oil? What impact do you think it can really have?
Well, first of all, we have to see whether it really comes through. All the skepticism that you have been hearing from market participants, analysts, I have openly talked about it. It makes no sense. It's unprecedented, untested, and it's very unlikely to work. It is, however, unfortunately becoming yet another element of uncertainty. We've seen recently China and India becoming a little more cautious on buying Russian barrels, at least for the, around the period of the EU ban, December 5, that kicks into place, because, they're saying if the price cap plan doesn't work, if they don't sign up for that coalition, then could the U.S. resort to extraterritorial sanctions, secondary sanctions on these two countries? So, and we do need these two countries to buy more Russian oil, right? To keep Russian oil flowing into the market even after the EU ban. So we have to see. It's just huge uncertainty at the moment.
Vandana, I wanted to just dovetail into what's going on with natural gas prices. I mean, we saw them peaking off in about June. We're down 62% from that peak. Does that mean that the market is now pricing in perhaps a better situation for Europe in particular in the winter? And if so, what does that entail?
No, Rish, I think the market and Europe, especially EU, is going to remain on tenterhooks going into the winter season. The slight relief that we're seeing now, which may well prove temporary, is mostly because Europe has managed to store gas. Gas storage in the EU countries is at more than 92%, which is a comfortable level. They've managed to do it much before their deadline. They have a lot of LNG coming in, a lot of LNG ships waiting at the shores to discharge. So they have that level of comfort. I think the biggest danger is if it turns out to be a harsher winter, gas demand goes up much more than previous seasons. And if Russia cuts off, whatever little gas it is still sending into Europe, and again, that is unpredictable. We don't know what Putin might do. So they just have to hunker down, sit tight, and pray for a mild winter, and that Putin continues to send whatever gas that he is still sending to EU.